Time for this week's stock picks. We're going to start with Kevin Matris.
Okay, mine is Lithium Motors, ticker LAD. They are in the auto industry, and let me just go down a bulleted list here. Domestic auto sales are at a 4-year high. That is making the auto industry become one of the top performing groups. According to Zacks, they are in the top 3% of the Zacks ranked industries. They also have a Zacks rank of a number 1, which makes Lithia one of the top stocks within one of the top groups. And if I were to look at a chart, I think that they have a beautiful looking symmetrical triangle pattern for all of you technicians out there. If they can break out to the upside, the breakout point is 22, I think they can make an immediate move up to 2650, and a move to 2650 represents a 20% gain from here. My pick, LAD.
Dealerships all over the country? I've never even seen them in the Chicago area.
It's Northwest.
Yeah.
Okay, Northwest. Steve?
I'm going with Chicago Bridge and Iron, which is one that you've done in the past. It has nothing to do with Bridge and Iron anymore, and it's not based in Chicago either. It's based out of the Netherlands, but it's
Computer software?
They're an infrastructure player, in particular in the energy space. And so, just taking a look at the big picture, I think we can all agree that there will be more energy consumption in the future than there is in the present as more of the world becomes developed. So there could be short-term blips in energy prices, but long-term pictures for more demand. So they help build the infrastructure around the world for the containing, refining, and distribution of energy, oil products, and natural gas. Right. One of the beauties of this stock is, these projects take years to make, and so they have bookings that go out several years of what they're going to do. So you have great visibility into the projects that are already in the pipeline, pun intended, and it looks terrific. So the growth is already kind of in the books. And that it's a stock that many folks in the industry, I've seen estimates up to $55 per share, what it's worth right now, given the current earnings outlook, which is a pretty hefty lift from its spot under 40.
All right. Shiraz, what do you got?
Deere & Company. It's
heard of them.
It's a play on the commodity cycle, particularly on the agriculture side. There have been some concerns about the high horsepower agricultural machinery segment in North America, US and Canada. But that's about 25% of their total revenue. 75% is abroad. This is agriculture, also construction. They came out with a solid beat last week, guided higher. The margin outlook looks impressive. So even though there are some questions on the margin side in the ag machinery cycle in North America, the rest of their end market looks extremely favorable. On top of that, they have a very nice juicy dividend, north of 2%.
And this isn't your first foray into ag equipment here, because I know you've like CNH Global
I do.
and AGCO.
That's right. Yeah. That's right.
So global growth, this trend is still going.
This is a long-term cycle, and as Steve mentioned in response to the CBI, you may have a little bit of these hiccups here and there, but the long-term trend is very positive. They had very impressive bookings. The order book.
People still need to eat. It's the decade of food,
that's
right?
That's right.
All right. We got less than a minute left. Twin Disc. This is a small cap company, $500 million. I found this on a Zacks screen a couple of weeks ago for both earnings momentum and price momentum. And that's because it got slaughtered into the October lows. The stock, I think, was trading below 20, and then it vaulted back up above 40. So there's your technical momentum. But this is showing up on a lot of buy lists for its earnings momentum, too. And you saw some strong action last week. They were bidding it up to 44, got hammered late last week down to 38. And so I would definitely be a buyer of Twin Disc below 40. All right, that's all for this week. We'll see you back next week.